Hi, this is Jack from Alpha Charts with a state of the market update. Today is May 16th, 2020. Before we get started, this is not a recommendation to buy, hold, sell any stock or security. This is for informational purposes only, and I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so we're going to start with the SPX, and this is the level that I've been watching as an important level, and it as so far is holding as that an important level. The other thing that we have been watching is the 50-day moving average. Now, when we go back 50 days, oh, it's 51. Let's try that again. When we go back 50 days, you're going to see it right there, right? So this is the 50th day right here. So next week, we are going to lose these bars, right? We're going to lose these bars all the way to here. So if this consolidation can stay in this general range, right, which is above the 50-day declining, keep 270, 2720-ish or so. If you can hold that, hold above the 50-day, you're going to wipe out a lot of bars here. And this 50-day should start to flatten now. I think that's definitely a positive for the market. If we can get a flat, then potentially upward sloping 50-day moving average, that would be definitely one for the bulls. Something that has me a little bit more concerned is if you see here, we have a lower high here, very slightly, but it is a lower high intraday. And actually not even intraday, just a lower high period right here. That is a little bit concerning right there. All right. So we have that. And I think that's a bearish scenario right here, potentially. Again, 27, 25-ish, we'll call it. I think that is an area to be watching. And even on the weekly chart, when you look at the weekly chart, you know what? We rallied right up into here. I mean, a retracement here just kind of makes sense, right? That was a big rally off the bottom. Top to bottom, we're looking at roughly 35% rally, right? So a little retracement back here kind of makes sense. Maybe that double bottom that we've all been waiting for, even if it doesn't get all the way down here, may start to happen. And if you look at the volume here, these are big volume bars on the way down. And then on the way up, these were okay, but these are bigger, right? So, I mean, this kind of tells me that I would not be surprised if we see one more dip in this market. And how far does it go? Nobody knows. But this tells me that participants aren't convinced that we're in a new uptrend yet. All right, so back to the daily. That's SPX, QQQ. All right, QQQ already has a rising 50-day moving average, right? So that's definitely the strongest of the indexes, without a doubt. But again, when we go to the weekly volume, so as it's been rising, we've seen a decrease in that bullish volume. So we'll see a pretty big reversal looking bar right here on good volume. So maybe this does turn over and make some type of double bottom here. Maybe it comes down to the 50-day. I don't know. That'd be about 10% or so. We'll see. But NASDAQ by far is the strongest of the bunch. And, this is a logical place for resistance to happen. Some could say here would have been a logical place too. And it probably is, right? You could probably even do that, and that would be fine. Because, again, it's an area more than anything else. And we are in that resistance area. All right, so looking at the IWM, going from the strongest to the weakest. So we have the big drawdown, we have the uptrend, here's our uptrend line, and now we've broken below it. Now, why is this significant? Well, this area right here, looking over here, very significant in 2018. It was back very significant in 2015 and 2016. And now we broke out above it, made a lower high, and now we're back below it, kissing the bottom of it. This volume bar right here, not that impressive on such a big up day, 1.59% up. We'll see if we can get back above, 127, 128. I think that's definitely very bullish. But right now we have lower highs and lower lows on the IWM. So, and a break of this uptrend line right here. So a retest of this area right down here, I think is very likely, especially in the weakest of the major indices. Again, just looking at the weekly volume, it kind of tells a story too. That's a pretty ugly looking weekly volume bar right there. All right, moving on, Dow Jones Industrial. Dow Jones Composite Average. Kind of rolling over, right? There's your 50-day, slightly above it. That's a positive, I guess, but it is declining the 50-day and looks very similar to the other ones. All right, let's go to the SMH, because SMH is kind of interesting because we have a lower high here and we have a higher low here. So it's making some type of, flag, triangle, whatever you want to call it, some consolidation in here. So a break of this may give us the clue to which way the bigger market trends are going to break also, right? So this is one I'm definitely watching. Again, lower highs, higher lows, consolidation. But SMH is going to be interesting. Again, the 100, this level right here, this is my key level. If we break down from here, but we hold 105, that's a place I'm very interested in right here. 105, 106, boom. So we'll be watching for that. And again, this going to the weekly, looking at what that line corresponds to, and just go to a line chart because it's cleaner. So that's the uptrend from the 08 low, right? And so it corresponds right there, and that is a big deal spot. All right, moving on. Next up is the financials. Now the financials, again, super weak, very similar to IWM, and they do make up a good part of the IWM. So super weak, 50-day moving average, screaming down, price under it, but there may be a silver lining. First off, let's look at volume. Good volume bars. So there's some accumulation at this level that is going on. Second thing, this area. Let's go to weekly just for fun. So on the weekly chart, right? On the weekly chart, this was an important area. And you could see as we zoom in a little bit more, right? We broke below it. We rallied up above it. So we consider this a false breakdown. We retested it. And look at this wick down here on the weekly. That's a nice wick right here, right? This wick says that buyers stepped in here. So this $20 level looks to be extremely important in the financials, right? So if we can say above, we'll call it $20. If we can say above $20, I think the financials have a great chance of, at the very least, stabilizing and starting to work on a base. I'm not saying they're going to outperform or anything like that, but financials participating is a huge thing for the bulls, right? So that's definitely bullish, above $20, bearish, below $20. And that's what I'm looking at for the financials. I think that's a big deal, this chart. And let's just see where the 50-day reacts to. Going back 50 days, 57, 56, there we go, boom. So 50 days is right here, right? So this moving average is going to start to flatten out just like all the other ones, right? And if price can keep above it, then I think that'd be very constructive. Against nice volume, looks like there's been some accumulation going on. $20 is key here. Lumber. So lumber, I'm going to take off this volume real fast. Okay. So lumber rallied back up, right, from the bottom, and now it's rolled back over. All right. And I do like lumber as an indicator for the market. And right now it has made a lower high and it rolled over. So this right here may be that indicator that we're looking at, say, okay, you know what, the market has, it may also roll over, and and we'll see if it goes lower. Now, if lumber can hold 47.20, 47, we'll call it $47. If it holds $47 and just consolidates here and then starts to move higher, huge bullish, scenario, right? If lumber loses $47, then expect a retest of the bottom. The whole double bottom scenario then is back in play, and that's what we're looking at. So I think lumber is finally giving us a potential clue to what may happen. This lower high here and lower low is something that I think we all should be very concerned with. Is it different, right? You have higher highs, higher lows all through here, and now this is a change of character. So we need to be aware of that, right? Let's look at the put-call ratio, and we'll change the line chart. All right, so the put-call ratio isn't really telling us that much, right? So it's a bullish tilt to it, but it's not a crazy bullish tilt. It's not at an extreme. So yeah, we'll keep moving past this, right? Not much to know there. But looking at SPX in relative to bonds, TLT, this is giving us a signal. And let's go to a weekly chart to make this a little cleaner. And what do we have here? Here's this, 2013. Again, all throughout, this has been an important area. The equities have rallied up and outperformed bonds here, right? Last week. And we talked about this last week. And then they rolled over. And we said, is it going to continue higher or is it going to roll over? Well, it gave us the answer. It rolled over here. So to me, this says, watch out. Are we still making higher highs and potentially higher low, right? This hasn't really proven yet. Yes, that is the case right now. But it definitely got rejected here. That much we know. So if we can make a higher low again, then that would be I guess the bullish case. But if we roll over even further, again, bonds outperforming stocks, that is a bearish scenario. So definitely one that I think needs to be watched right here. Really important area. So this is definitely definitely what I'm watching. Let's look at high yield bonds by themselves. So looking at high yield bonds on the daily chart, and you call this maybe a flagpole, and here's the flag, and we have this consolidation. Now, an upward break here would be the bullish case scenario. A break down from here is the bearish case, right? This is inconclusive as is, right? This doesn't tell us what is actually going to happen yet, because it has not broken out. But it's definitely something that I think bears watching. How high yield or junk bonds are reacting is a risk on, risk off indicator that I like a lot. And looking at them versus government bonds, it tells us kind of how the credit spread world is looking, right? And again, this could be a bear flag. And if it is a bear flag, that would be the bullish scenario, right? So if we see credit spreads start to come down even more, that is the bullish case, right? We want to see them down here and very kind of tighten up a little bit. If credit spreads start to widen again and they get back up in this range, that would be the bearish case, right? At least short term, right? And then we would look and see, does it take out this high or does it stay below this high, right? Because then it would just be a lower high potentially. But so if this consolidation breaks up, then we're going to look and see how it reacts in this way. If it breaks down, then we'll see if it takes out this area right down here. But all in all, how this consolidation resolves will give us a lot of information about the next short term in the market. Are we going to see again that second dip where we make a double bottom type scenario, or do we continue higher? The VIX, the VIX continues to fall, right? We're making lower highs, boom, boom, and we're making lower lows. I think that's a positive, right? It's still elevated, right? We're still at 31.9, so it's still elevated, but we are going or trending in the right direction. So that's positive, right? Looking at copper futures versus gold futures, right? And so let's go to a weekly chart again, just to clean it up and make it look good. So this was the 2009 low right there. And we came back and we sliced right through it. We came back, we tested it, and we rolled back over again, right? So I think this is a bearish scenario, right? So this is the bearish scenario, right? We hit it, we rolled over, very similar to the SPX TLT, right? SPX TLT. When you look at this one, again, we rolled over, we tested, we came back, GC1. Oh, crap. Of course, retype this again. Yep. And boom. Okay. Yep. So it's rolling back over again. So as long as we're below this green area, my green area right here, which is the 2009 low right here, I think this is definitely the bearish scenario right here, and that's what we're seeing kind of play out. And it goes right along with the SPX TLT chart. All right. So let's look at gold versus SPX, right? SPXC, SPX. All right. So gold versus SPX. So we had this big downtrend, right? 2011. It kept going down, kept going down, kept going down, kept going down. And then we're seeing this bottoming action right here, right? Nice little base that it's built from, 2014, 2013, 2014, all the way to today. That's a 7-year base that we're talking about right here, right? 6-year base that we're talking about. And it is trying to form an inverse head and shoulders. Now, I don't know if it's going to, right? I don't know if it's going to, but it looks like it wants to form it. And it doesn't matter if it does or doesn't, because I think that we're going to see at the very least a retest of this level. Now, the retest, it could roll back over again, but if we do see this retest, which is, again, very likely, that would be gold outperforming SPX or the SPY, S&P 500. And that would be, probably more of a bearish scenario if gold is outperforming. And if we get actually a breakout and it starts to move higher, that would be, I think, the very bearish scenario, right? That would mean that we've really broken down. So as of right now, I think it's just an inverse head and shoulder base that is forming. And until it gets back up into this area, I'm not really too concerned about it. But I'll be honest with you, the gold miners, and I wasn't planning on showing this chart, but the gold miners look phenomenal. And I am long multiple. If you follow me on Twitter, you'll know this. I'm long multiple gold miners right now. I mean, this is a serious breakout. So the gold versus SPX charts, I mean, I would very much expect at least a retest of this area. And again, it could roll back over, it could break out. What do I know? But that makes sense to me. All right, so let's look at equal weight S&P 500 versus the S&P 500 SPX. All right, so this is the equal weight versus the weighted average. And it gives me kind of an idea of, a breadth. This is a breadth indicator. And what is this showing? Well, we're making lows, not all-time lows, but we're still making relative lows for, multi-year, lows at this point. We haven't been this low since, 2009. So we're making multi-year lows. And if you see, and like this was another area where you see this type of big, sharp decline, right? And we made lows, and then we kept going low, 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 low. And really, if you look at it, we didn't start to make a, March 2nd, 2009 is about right here. And a higher low is when the market really started to turn, right? So we haven't made a higher low yet. And I think that that is something that we should watch for in this relative chart, right? In this relative chart, if we can kind of start to bottom and make a higher low of some significance, right? That would be, I think, a very bullish turn of events. We're not seeing that yet. So again, this is the equal weight S&P versus the SPX. So we're not seeing that turn of events yet. So to me, this is still in a bearish scenario chart. Value line geometric index. All right, so let's go ahead and I'm going to pull this right here. Right. Okay. So this is Alpha Trends. If you don't follow Brian Shannon, he's at Alpha Trends on Twitter. This is something he came up with, 10 years ago, and he shares it freely. And this is understanding market structure. And Weinstein also has something, does this. So you have the stage 2 markup, you have distribution, you have stage 4 decline, and then it comes down to the bottom and we come back around and we do it all again, right? Okay, so let's look at this. So looking at value line geometric index, to me, this looks like a stage 2, however you want to slice and dice it. This is a stage 2 markup, right? We had a big decline. We chopped around. We had another large decline. Here's your stage 4, right? And now maybe this rolls over. And if we can make a lower low, that could signal the a bottoming process for the broader market. So it's something that I'm watching. I think that, again, this almost looks like it could be false breakout right here. And if we see a move lower, maybe undercut this low, that'd be awesome, right? If we undercut this low, and then that would potentially be a reason to think that the bottom may be in on the market. So, but this rolling over with a potential false breakout, again, it's not confirmed yet, but here's a potential false breakout. If we fall below, 380 on the value line geometric index, I think there's a good chance we're gonna look at 300, right? 300 is right here. That would make sense to me. Undercut, and then we can potentially put a bottom in. Looking at sentiment, so Helene Meisler on Twitter, posted the market sentiment for the Citigroup panic euphoria model. And you see January, February, we got above into this euphoria area. And we all know what happened afterwards, right? Well, we're back up in that range too. So there's some euphoria that Citigroup is now forecasting in the market. And the market usually, when it gets to this area, tends to decline. Okay. So, I mean, is it like, an actionable signal? I don't think it's actionable. Like, I'm not going to sell all my stocks because it got up here, but I'm going to make sure I understand where my stops are. I'm going to make sure I understand where my out is and what my plan is, because again, if this has been a pretty good indicator so far about what's going on. So anyway, so that's that again. And then let's just bring it back to the SPX right here. And let us look at the daily. All right, so let's pull up the picture. Where you at? There you are. All right, so you see stage 3, then we have the chop, then we have another decline for stage 4, and the ultimate decline. So the question I have, was this stage 3 chop, and then this is some kind of weird stage 4 that we went through right over here, and then this will be a range, and then we come back out? That's a very good possibility. Or is this stage 3? This is the chop, and we still have to undergo stage 4. That is the question I have. I'm in the camp that this is some kind of weird stage 4, and we're going to see some sort of secondary bottom here. Again, I'm not saying we have to come all the way down here. It could come to here, right? But I think we're going to see one more dip, and then I think that would be let all the moving averages kind of catch up. This 50-day would then align correctly. The other longer-term moving averages would align correctly, and I think things would be good. So that is what I'm thinking is going to happen. I have no idea what's going to happen, but in the short term, I'm seeing a lot of places that says use caution. I'm seeing a lot of lower highs right here, like this right there. It's very subtle, but that's a lower high and that's a lower low, right? This is the start of a new potential downtrend. Um, so we have to be cognizant of that. We got to make sure we understand that. We're seeing copper gold ratio roll over. We're seeing the SPX TLT ratio roll back over. We're seeing what else? We're seeing the equal weight RSP SPX look like have a bearish tilt to it. Value line geometric index, it looks like that it's rolling back over. Lumber is rolling back over. Um, so there's a lot of things. Even SMH, which I put a lot of value in SMH. You know, uh, that has a lower high. Consolidation. We could come back and we could again. We don't have to come back to 100. We don't have to. That's the place that has to hold. But we could come back and make some type of U-shaped. And again, I think the next one, see how this is V-shaped? I think it's very likely that if we do come down, we're looking at a U-shaped second bottom, whatever that looks like. I think that would be the more likely scenario than another V-shaped thing. But I don't know. Again, lots of lower highs forming. This is still consolidating, right? We can easily draw some kind of, something like that, as long as it stays in this range. It's just a sideways consolidation. I think if we break below this area, 2780 has always been this important area, I think. But if we break below this area, it's going to be I think that U-shaped second bottom is a lot more likely. I think levels are clear. I think across the board, when we look at intermarket ratios, I think when we look at breadth ratios, I think when we look at just indexes in general, I think that the levels are fairly clear. And for me, listen, I'm still probably about 85% invested in the market right now. So I'm mostly invested. GDX is where a lot of my holdings are right now because I really love this chart. Doesn't mean that we can't roll over tomorrow and retest and see what happens. But again, as for now, this chart looks amazing to me. And all my other positions, I'm in AMD, this is a nice little cup and handle that may or may not come to fruition. This could very easily roll over with that, with lower highs here. Again, there's higher lows. We'll see, but I do have an AMD position. I have an Abbott position. This one I loved. It went broke out. It came back. It's retesting again. If we, get below this level, I'll probably be selling my position. The way I manage my money, and again, I posted this video already, is I've already sold a 5% position in this up here automatically. And so even if I break down here, this was a very, very small loss or a break even, depending on where I get out. So it's no big deal. I would take this trade all day long, right? I mean, this is an amazing looking trade. It may go against me if it falls down here again. And I have gold miners, right? So we don't need to go through those. You know what they are. And if you don't, check out my Twitter feed. I tweet most of my positions, within a day or so of me establishing them. All right. Well, I think that's what I have for today. I think that being cautious right now is the important thing on SPX. We break out, it's bullish. We fall over, it's bearish. We went through the charts. Good luck this week, and we'll talk to you next weekend. Take care. Bye.